Welcome back to our accounting classroom, and today we are going to be taking a look at nonprofit organization. In our previous video series, we would have looked at the topic of markup and margin, and we used an example question where we were looking at using that concept with respect to a profit-making business. However, we are going to be looking at nonprofit organizations, and we will be also be taking that same concept of markup and margin into the nonprofit organization, and we will demonstrate how to use it and how to use the various accounts within a nonprofit organization, books of keeping the books for the nonprofit organization. But before we get into our example question, what we will talk a little bit about is what is a nonprofit organization. So let's look at what is a nonprofit organization. Now, a nonprofit organization is a legal entity that is organized and operated for a collective, public, or social benefit, and this is according to Wikipedia. Their main purpose is not trading or profit making, but to provide a service to their members. And they belong to their members, and their members will pay what we will call subscriptions, or they will pay a due. So what are some examples of nonprofit organizations? So you have some nonprofit organizations, like for examples, associations, clubs, societies, unions, charities, universities, churches. And some of these nonprofit organizations may not have, like for example, various small charities where you will have charities that help the homeless people. You may have a charity that help persons that are disadvantaged on the privilege. You may have a charity that may help single mothers, and you may have like football clubs, basketball clubs, squash clubs, various clubs, bridge clubs, tennis clubs, various clubs you may have. And then you have these churches. So what we're saying is that with some of these nonprofit organizations, they will not have like a full-time accountant, and the accounts that the nonprofit organization prepare are not the same as for a profit-making organization. So let's look at the accounting terms in a nonprofit making organization versus those with a profit-making business. So first of all, in a profit-making business, you would have something called capital, whereas in the nonprofit organization, capital is referred to as accumulated fund. However, the same accounting equation is used to arrive at your capital. The same accounting equation that you use to arrive at capital is the same accounting equation that you use to arrive at accumulated fund. So for a profit-making organization, your capital is equal to your assets minus your liabilities. And for a nonprofit organization, your accumulated fund will be your assets minus your liabilities. A profit-making business would have a cash book, and usually your cash book would have in your cash account and bank account if it's a 2-column cash book. If it's a 3-column cash book, it will have in the discount columns. However, the receipts and payment account, they will call is what is used in a nonprofit organization. So you will not see people saying, well, let's prepare a cash book for a nonprofit organization. They usually prepare what is called a receipts and payment account. In your profit-making organization, you have an income statement. In the nonprofit organization, you have income and expenditure account, and later we will show you an example of that income and expenditure account. And then in a profit-making organization, you have what you call your net profit, whereas in the nonprofit organization, you do not say net profit. You call it a surplus of your income over expenditure. So it's a surplus of income over expenditure. A net loss is not referred to as a net loss in a nonprofit organization. It is referred to as excess of expenditure over income, which is a deficit. So you have surpluses and deficits. So excess of expenditure over income, that's the name for it in a nonprofit organization, whereas in a profit-making organization, you will call it a net loss. This is an example of what the receipts and payment account may look like. It's a summary of the bank and cash transaction. That's what the receipts and payment account is, a summary of bank and cash transactions, and it reveals everything that happened during the period. So on the left side, you have your receipts, and receipts will be all monies coming in, like for example, subscriptions that you receive, any other membership fees, if you sold a non-current asset, if you receive money from fundraising. So those are the receipts, and payments will be any money that the club would have spent during the period. It will be recorded on the payment side. Additionally, you have your opening bank or cash balance and your closing bank or cash balance in the receipts and payment account. This also, with the nonprofit organization, they also prepare another account called a subscription account. And a subscription account is used to make adjustments for the subscription of the members, to record the amount of subscriptions due for the accounting period. So because usually when you are given questions from an examiner, they may give you subscriptions in arrears. That's what we have here as accrued brought down. And they may give you subscriptions in advance at the beginning. This is what we're calling prepaid. And then they may give you subscriptions in arrears at the ending, and subscriptions in advance at the end. So this is what we're calling the advance and the accrued. This is what arrears. This is what we're calling accrued and prepaid. Also, in your receipts and payment account, let's go back. If you would have looked at your receipts and payment account previously, and you would have seen that in that receipts and payment account, you would have had the subscriptions received. Now, those subscription received are entered into the subscription account, and the subscription account is basically a revenue account. So therefore, any subscription received would have to be credited to this subscription account. So then during the period, you may have some subscriptions that were written off. So if you have subscriptions that were written off, you must also record those as well. So then the difference between the credit side of the subscription account and the debit side will give you the amount of subscriptions to enter into your income and expenditure account. This is why I have this in bold, because this is a balancing figure of the account. This is a figure that you don't usually know. You will have to subtract the total on the credit side from the total on the debit side, which will be your accrued, your subscriptions in arrears brought down, and your subscriptions prepaid. At the end, the two of these figures added together, subtracted from the total over here, will give you your income and the subscriptions to put into your income and expenditure account for the period. So this is an example of what the subscription account will look like. Now, you also have to prepare some final accounts for the nonprofit organization. One of those may be a bar trading account, again, the income and expenditure account, and a statement of financial position. Now, you have the bar trading account. They tell to compute the bar profit. This is what you're using the bar trading account for. And we are seeing here that the trading ancillary activity does not always have to be a bar, but it can be any activity. So we're saying, like, let's say, for example, the club had, you had a football club and it had a bar. That would be a trading activity because they're operating a bar where they are selling stuff to the members and maybe the general public. So they're selling stuff to the members of the club and maybe the general public. So we're saying because of that trading activity, obviously they will have to buy supplies and they are also selling. So that's why it is a trading activity. So what the club will want to know is if they're making a profit or loss from that particular trading activity, if it's a bar. we are also seeing that the ancillary or trading activity does not always have to be a bar. It can be any other type of activity, and it depends on the type of nonprofit organization that you may have. So the profit or loss from this particular activity is what is included in the income and expenditure account. The income and expenditure account is used to compute whether you have a surplus or deficit for the year. And that surplus or deficit is carried to your statement of financial position, or what you may call your balance sheet. And this is prepared, your statement of financial position is prepared the same way that you will prepare for a profit-making organization. The difference is that you will not say capital, but you will use the term accumulated fund, and you will state excess of income over surplus of income over expenditure if it's a profit, or excess of expenditure over income if it is a loss. Okay, so I'm not going to go through the example, but we're saying if the club operates a bar or any other trading ancillary activity, at the end of the year, what happens is that it has to produce a trading account for the activity, and then that profit or loss is then transferred to the income and expenditure account. Now, only the sales, purchases, and expenses related to the trading activity will be included in the trading and profit and loss account. So if it's a bar and you have bar sales, bar purchases, bar opening stock, bar closing stock, if you have depreciation for bar equipment, only those things associated with that particular activity are included in the trading and profit and loss account for the particular activity. In this case, I'm referring to a bar. This is an example of what the income and expenditure accounts looks like. You have the name of the association, income and expenditure account for the year ended, and you have a heading called income, and you list all income earned. And if there was a profit from the trading activity, you include that as well. And then you subtract your expenditure and you list all of your expenditure for the period within the organization. So then you will subtract your total expenses from your total income, and you will either have a surplus of income over expenditure or excess of expenditure over your income. So this is an example of what the income and expenditure account will look like. Now, as I said earlier on, that the nonprofit organization is owned by the belong to the members, and the members pay subscriptions or dues, and the organization usually exists to provide service for their members. Okay, so what will happen is that you would have some members that may want to pay a lifetime or lump sum one time, what we will call a lifetime membership. So when they come into the organization, they will pay one lump sum of money, which will span for the entire period of time that they are part of that organization. So this is called lifetime membership, and this is income earned over a long period, and therefore it should not be treated as income in 1 year. The only amount that you can treat as income is the part that is for the current year. The rest of that money will have to be treated as a liability. So each year you will treat the portion as income for the year, and the rest will go as expenditure. The payment will then spread over the estimated or expected membership period. And just as I explained, the annual amount from the total payment will be entered in the income and expenditure account. Okay, so the lifetime membership fund can be written off. And also if a member does that, then what is left over can be transferred to the accumulated fund. So that's it with respect to the nonprofit introduction to nonprofit organization. In our next video, what we are going to be doing is an example question with a nonprofit organization.